Hi, I'm Connor O'Brien, CEO of O'Shares ETFs, and with me today, Kevin O'Leary, Chairman. How are you, Kevin?
Great to be here, Connor. Thank you.
Excellent. So we're going to talk about our large cap quality dividend ETF. It's designed for certain objectives. Kevin's going to share his investment philosophy on why these objectives are so important to him and his family wealth. The design basically is to start with all the large cap stocks and then exclude those that aren't strong enough in terms of dividend quality, dividend growth, profitability, and balance sheet strength. And as a result, give people a steady income growth type of investment designed to have less risk than a generic own everything type of large cap ETF or large cap investment. Kevin, tell people why that's so important to you as an investor.
Preservation. I want market returns, but above all, I want preservation of my capital. And so because of the names inside of OUSA are much higher quality balance sheets than just the aggregate of the S&P 500, I'd rather own that. I more or less track the index, but I have a lot less volatility. And above all, in drawdowns, when markets correct, I don't participate in 100% of that. That's what I really care about when I talk and say preservation. OUSA is my core holding. It's 40% of what I own. It is the building block upon which I own other of our ETFs, but it is the number one because it is the largest cap and it's the core of all the trusts in terms of how it preserves capital and provides income.
Excellent. I'm going to take people through a couple of quick slides to show them the methodology here. So we start with the 500 largest stocks, score them on these metrics that are quality, volatility, yield, profitability, etc. You end up with 100 approximately of stocks that best meet the requirements and give people a portfolio that has performance that does what Kevin was just talking about. Let's go to the next slide here, show people a couple of really important building blocks. If you actually look at all the 500 largest stocks and say, let's rank them based on dividend growth, the stocks with the highest dividend growth, the first quartile of dividend growth, have the strongest performance history. Pretty strong, powerful message. The other slide next to it shows return on assets, meaning profitability. The companies that have the strongest profitability have had the strongest performance over this past 5-year period. So these two building blocks are cornerstones of the OUSA process. On the next slide, what we see is the result of the portfolio metrics. Just imagine OUSA was one big company with this level of profitability, this level of dividend growth, this level of lower leverage and lower volatility. Characteristics that so many investors would really rather have than having less profitability, less growth, etc. So thank you for that one. And then the next slide here just shows people the performance history of the index from July 2015, and it basically shows on that top line performance compared to the Russell 1000 value, so outperforming by a meaningful amount with less downside risk and less stress when the market's stressed, as Kevin was saying. And people are more concerned probably with money lost than volatility. And that is one of the things that OUSA would help people is avoid exposure to the losses when markets have stress events. Kevin, a lot of investors out there, and they have an asset mix of fixed income and equities. Fixed income hasn't done much very good for people in the last little while. What are your comments on how you are allocating your portfolio away from fixed income? How much have you moved from fixed income? Where did it go? How did you use OUSA?
Well, basically, I've changed from a 50-50 fixed income and equities, which we had for decades, to 70-30, 70 in favor of equities. And the majority of that is in OUSA, as I mentioned, for preservation reasons. And so we don't really like fixed income right now. The yields are very, very low, obviously. And inflation is ticking up, and that does destroy value in the fixed income market. So I'd rather, for the next few years at least, be harbored in the safety of OUSA.
So shift from fixed income into high quality income growth type of stocks that you get out of OUSA. It's a great message. So thank you everybody for watching this video. Please subscribe to our YouTube channel if you'd like to see more of our research videos with me, Kevin O'Leary, and at other times special guest speakers. Thanks very much.